This is Nightly Business Report with Tyler Matheson and Susie Guerin. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Tech tanks. Microsoft misses big. Google falls short. But are tech stocks still worth owning as the Dow and S&P are at historic highs?
Detroit bankrupt. The city filed for Chapter 9 protection, making it the largest city in U.S. history to do so.
And Dell drama. Today was supposed to be the day Dell's future was decided, but a key shareholder vote was delayed. So what happens next? We have all that and more tonight on Nightly Business Report for Thursday, July 18th.
Welcome, everyone, and good evening. It is the heart of earnings season, and tonight we heard from two of the biggest names in technology. That would be Google and Microsoft. Seema Modi is here now to break down the numbers for us, which weren't so hot. Let's start with Google.
Let's start with Microsoft, Tyler.
Oh, all right. That's great.
Reported a similar story. Reported a huge miss on its bottom line with fourth quarter earnings of 66 cents a share versus an analyst estimate of 75 cents. Revenues also came in weak. Microsoft has been hurt by ongoing weakness in the PC market and the ongoing consumer shift to tablets. Microsoft CEO Emmy Hood says while our fourth quarter results were impacted by the decline in the PC market, we continue to see strong demand for our enterprise and cloud offerings. One bright spot, Microsoft's entertainment and device business, which includes the Xbox game console. That business saw a 7.5% jump in sales. Shares of Microsoft, while down after hours, still up about 30% year to date. Now, Tyler, on to that tech giant Google, which reported a huge miss, posting a quarterly profit of $3.2 billion, up from $2.8 billion. Total revenue grew 19% to $14.1 billion, but that did not satisfy Wall Street. Another key number analysts look for, cost per click. That's the average price it charges advertisers every time someone clicks on their ad on a Google web search engine. That dropped 6% year over year. On the conference call, CEO Larry Page did talk about how when Google started, they were just dealing with one ecosystem, the PC. Now, there are many devices, platforms, and spaces to really penetrate, and how that's not only a challenge, but also an opportunity for Google.
All right, Seema, thank you very much. Google, Microsoft, doesn't matter which one you begin with.
Great.
Thanks very much, Seema Modi. All right, joining us now to react to the numbers, Skip Aylesworth. He's co-portfolio manager of the Hennessy Technology Fund. Mr. Aylesworth, welcome. Take your choice. Which one do you want to start with here, Google or Microsoft, and what did you think?
Well, on the big picture, probably a little disappointed in both. Let's look at Google, though, because I think when you peel back the numbers here, there were some positive things for the future. One of those is research and development, or CapEx, which is an expense, which kept revenues down or profits down. For Google, up about 30% this quarter. So an additional $400 million spent on R&D and CapEx. Second major issue of a positive nature is the headcount shrunk, almost 9,000 employees. And so these are two positive elements for the future. On the negative side, go ahead. Go ahead.
I was going to jump in, Skip, and ask you about Microsoft. What happened with Microsoft, and especially just coming off of this massive reorganization that they announced last week? They have all of these product offerings. Do you see anything here that says that Microsoft has a vision for where they're going for growth?
Well, I think, as the CEO said, it's in these new services cloud-based offerings. What's really hurting Microsoft, of course, is its reliance on the PC and Windows environment, much like the story at Dell to a certain extent, and HP. So they hurt on that, but they're trying to turn that ship around and go down these other paths to generate new sources of revenue.
Skip, both of the stocks have had pretty nice runs so far this year. Microsoft, at one point, was one of the leading stocks in the Dow so far this year. Would you buy either of these stocks at today's prices?
I think that, well, from an individual standpoint, it's really your focus on the future. And I would be more positive on the Google side than I would be on the Microsoft side.
All right, and
so I would buy the Google.
You would buy Google and I know you have Google in your portfolio. Would you be buying it at $873 today, buying more?
I would, anytime you have a price decline like there was after market, it's a good time to add to positions as long as you have a long-term outlook.
All right, and real quickly, you know, we've seen the stock market hitting all these new highs, but the technology stocks have been holding back a bit. Just generally on tech stocks, you run a tech fund. What is your view on what's going on with tech overall?
Well, on the big tech names, it's very hard to see this consistent growth just because the numbers are so large. For both Microsoft and Google, a little shift of, quote, $1 billion is just a small percentage. I think the opportunities in the small cap sector will provide, might be more rewarding from an appreciation standing. The overall environment, you know, technology is the key for productivity increases, and everybody likes the greatest and best new widgets. So we're all awaiting Apple's next product.
Mr. Aylesworth, thank you very much. Skip Aylesworth runs the Hennessy Technology Fund.
New records on Wall Street today. The Dow and S&P 500 posted fresh all-time highs thanks to another batch of positive news on earnings and a drop in jobless claims. Investors were also encouraged by more reassuring words from Ben Bernanke in day 2 of his testimony on Capitol Hill. The Federal Reserve Chairman told Senate lawmakers that the Fed will continue stimulating the U.S. economy as long as necessary. By the closing bell, the Dow rose 78 points to 15,549. That's the new record. The NASDAQ added about a point, and the S&P was up 8.5 points to 1689.
Well, Susie, the city of Detroit has just become the largest municipality in U.S. history to file for bankruptcy. The city's state-appointed emergency manager, Kevin Orr, asked a federal judge for permission to place the insolvent city in Chapter 9 protection. Scott Cohn is with us with more on what that bankruptcy filing means for the city and its residents and for its creditors.
And for the nation, Tyler.
Right.
This is a major event. Detroit, you know, once had 1.8 million residents. Now it has less than half that. It was the cradle of American manufacturing. Today, a shell of its former self with vacant homes, blighted neighborhoods, and an unemployment rate in the metropolitan area of 9%, much higher in the city proper. Kevin Orr is the emergency manager appointed by the state to handle Detroit's long festering fiscal woes. He had tried to reach an agreement with creditors to stave off this bankruptcy. He could not. Michigan Governor Rick Snyder, who appointed Orr, called this decision painful, but says there was no other viable option. Detroit, as you heard, is the largest American city ever to file for bankruptcy. In fact, by far the largest. Its long-term debt as high as $20 billion and not a lot of viable options.
So what do the creditors stand to lose on this? Often there's a restructuring. They get paid off at pennies on the dollar. Do we have any idea?
We don't. And the federal judge first now has to approve this. This was a request to go into this Chapter 9 bankruptcy, which is the municipal brand, so to speak, of federal bankruptcy. Right. And so the judge will have to now go through about a 3-month process in approving this. And then there's a whole reorganization plan where they will have to work out agreements that they couldn't up till now with all the creditors, including the pensioners.
You know, this is just so shocking that something like that is happening in the United States. And, you know, we've heard about state finances in trouble, cities' finances in trouble. Is Detroit just a, you know, one-time unique situation, or will we be hearing this about other major cities?
Well, you know, there's been a lot of talk about that for a while since the financial crisis. Detroit for 40 years has been a place of extremes. Extreme racial strife, white flight, the decline of the manufacturing base. So in a lot of ways it is an extreme, but maybe a cautionary tale. You know, this is a city that has had all of the issues that any municipality has had in terms of dealing with labor costs, dealing with pension costs, dealing with a declining housing base. And so other cities have to take a look at this.
You know, it's very interesting that 2 of the largest bankruptcies we've had in the corporate world in recent years were in Detroit, right. General Motors and Chrysler. Those companies came out on the other side much, much stronger. Can that happen for Detroit?
That certainly is the hope. And all of the comments that you're hearing now as this long-feared bankruptcy filing has finally happened are, you know, Detroit will come out of this. Maybe this is something that even the people who were opposing this for the longest time seemed to be conceding that it was necessary, that this was a necessary step. Now, under bankruptcy, the whole purpose of the bankruptcy law is to allow the city to get out from under its debts, meet its obligations to the extent it can with its creditors, reorganize, and move on. And that's the goal here.
All right. Scott Cohn, thank you very much.
Sure.
Appreciate it.
Let's hope that happens there. Meanwhile, some wind was taken out of the sails of the Windy City today, too. Ratings agency Moody's Investor Service lowered Chicago's general obligation bonds and sales tax ratings by 3 notches, citing the city's large and growing pension liabilities and budget pressures. The credit downgrade affects $8.2 billion of Chicago's bonds and sales tax debt. Moody's also said the outlook on the city is negative.
Another twist in the long battle to take over Dell, where shareholders were scheduled to vote today on the future of the company. But that didn't happen. So what do shareholders think, and what is next for the world's #3 PC maker? Jackie DeAngelis has more from Dell's headquarters in Round Rock, Texas.
A vote on Michael Dell's $24.4 billion deal with private equity firm Silver Lake Partners to take Dell private at $13.65 a share adjourned till next Wednesday. This, as investor Carl Icahn and Southeastern Asset Management have put forth a competing proposal, one that keeps Dell public and values the company at $15.50 to $18 a share. The pros for the Dell deal? That the founder and CEO is the right person to lead a turnaround, privately, without Wall Street scrutiny. But Icahn's camp says that Dell's offer undervalues the company, and analysts wonder if the Dell offer isn't opportunistic.
Carl Icahn says, no, we can turn this company around publicly and shareholders will win from this. So I like Carl Icahn playing much better than do Dell, because Michael Dell is just, yes, the company will turn around, it'll be very well off 2 years from now, but why can't the shareholders benefit from that?
Roughly 300-plus investors attended the meeting today at Dell headquarters in Round Rock, Texas, some concerned about the adjournment and that it could send shares tumbling.
I'm not worried, I'm concerned and realistically concerned. Yes, it's going to have an impact, but there are thousands of us out there waiting to see what's going to happen, because there's an option for us to make more money than the $13.65 that he's offering us at this point.
Carl Icahn and Southeastern taking their own view on today's developments, saying in a statement, "We believe that this delay reflects the unhappiness of Dell stockholders with the Michael Dell Silver Lake offer, which we believe substantially undervalues the company. This is not the time for a delay, but the time to move Dell forward." Investors came here today looking for a decision, but all they got was more uncertainty. Will Michael Dell sweeten his offer and get his deal passed next week, or will shareholders be reviewing Carl Icahn's offer at the annual meeting? For Nightly Business Report, I'm Jackie DeAngelis.
A sigh of relief for Boeing in the wake of a fire on board one of its 787 Dreamliners last week in London. Now, British aviation investigators are recommending that an emergency locating transmitter found on those aircraft made by Honeywell, not Boeing, be disabled.
Earnings dominate tonight's market focus, and we begin with United Healthcare. The Dow component and the nation's largest health insurer signed up almost 10 million new members, and fewer people filed claims. That's a good recipe, and that boosted quarterly revenues and profits. They beat analyst estimates. The company also increased its outlook for the year. Let's take a look at UNH shares. Biggest gainers in the Dow, surging 6.5% today. Morgan Stanley reported a $1 billion profit and said it plans to buy back 500 million shares, first since 2008. Revenue grew in all of its major businesses, trading in particular. The stock finished today up 4% to $27.70. And it was a case of good news, bad news for Verizon, the nation's largest wireless carrier. First, let's give you the good news. It activated more iPhones than expected in the last quarter. And now the bad. The company saw some weakness in its traditional wireline unit, which pressured overall revenue. And separately, Verizon is joining rivals AT&T and T-Mobile, instituting an installment plan for customers who want to update their devices every year instead of the current plan of every 2 years. The stock finishing the day lower by 1.5%. It closed at $49.97.
It was a tough day for Sherwin-Williams. The paint maker reported disappointing second quarter results, issued a weak outlook for the current quarter, and said that Mexican regulators rejected its bid to buy a paint company in that country. The stock plunged 8% to $167.94. And earnings at Scholastic tumbled 62%. This publisher of children's books is blaming weak sales of the Hunger Games trilogy and lower book club revenue per order. Next year, the company plans to focus on new educational technology programs for the iPad, which it hopes will increase revenue. Meanwhile, the stock was off by more than 8% today to $29 and change.
And still ahead, J.P. Morgan facing a record fine. The allegation, it manipulated energy markets. But it isn't the only firm accused recently of wrongdoing. Is there any way to stop businesses from behaving badly? But first, a look at how the international markets closed today. J.P. Morgan Chase now faces what could be the biggest fine ever to settle allegations that it manipulated electricity markets in the Midwest and California. The Federal Energy Regulatory Commission is close to an agreement with the New York bank that could mean a fine of nearly $500 million. But remember, J.P. Morgan made $6 billion in profit last quarter, so a $500 million fine would be less than 10% of one quarter's profits. Some legal experts say fines for misconduct need to get a lot bigger to deter corporate misbehavior, of which there's seemingly been a lot lately. What's a $500 million fine or settlement to a company the size of J.P. Morgan Chase? Not so much, says attorney Melissa Maxman.
The fines are astronomical at this point. On the other hand, the companies that are being fined astronomical amounts can afford it.
Maxman has seen both sides. Once a federal prosecutor, she now defends companies accused of behaving badly.
Sometimes companies do make a financial decision to disregard a law or break a law because it's in their financial interest to do it. And sometimes, just as we all have done in the past, maybe in school or otherwise, we think we won't get caught.
But increasingly, they are, all around the globe. Last year, British drug maker GlaxoSmithKline pleaded guilty and agreed to U.S. civil and criminal penalties of $3 billion for unlawfully promoting prescription drugs, among other offenses. It was the largest healthcare fraud settlement in U.S. history. That was 1/3 of a record $9 billion in settlements negotiated by the federal government in 2012, nearly triple the recoveries in 2011, and 50% more than the previous record haul back in 2006. Just this year, BP was sentenced in January to pay $4 billion, a record for an environmental crime stemming from the 2010 Deepwater Horizon spill in the Gulf. RBS Securities Japan agreed to pay a $50 million fine in connection with the rigging of LIBOR rates, bringing the RBS and RBS Japan totals in that case alone to $612 million. And in May, Walmart pleaded guilty to violating the Clean Water Act and was sentenced to pay a fine of more than $81 million. Fines for antitrust and price-fixing allegations, like the one J.P. Morgan Chase faces, have grown the most in recent years, topping $5 billion in 2012. And still, says University of Baltimore law professor Bob Land, companies are willing to take the risk. Land, along with co-author John Connor from Purdue, says we only catch about 25% of the market manipulators. And at that rate, he says fines need to be 5 times what they've been. Land also says people tied to price fixing and other violations should be banned from their industries for life. That might be a deterrent, but attorney Maxman figures her practice will stay busy no matter what.
As long as profit maximization is going to be a primary motivator of a corporation, there will be incentives to bend the rules, cut corners.
Lawmakers are close to a deal that would lower the rate on new subsidized student loans just weeks after allowing them to double to 6.8%. A bipartisan compromise would reverse that rate hike on new Stafford loans that went into effect on July 1st. So if it passes, Undergraduates will be able to borrow at a rate of 3.9%, graduate students at 5.4%, and parents can borrow at 6.4%. And coming up on the program, hedge fund manager John Paulson famously bet against housing before the bust. Now he's calling it the best investment anyone can make. But is it? But first, let's take a look at how commodities, treasuries, and currencies performed today. The housing market has been red hot lately, and that may be why a California builder decided to go public on Wall Street. UCP began selling stock to the public for the first time today on the New York Stock Exchange. It's the fourth home builder to go public this year. But UCP is off to a disappointing start. Its shares tumbled nearly 7%. Looking at the three other home builders that also went public this year, William Lyon and Tri Pointe are trading below their IPO prices, but Taylor Morrison up about 14%.
Well, despite those disappointing IPOs, many investors are still bullish on housing, and one of them is the hedge fund manager John Paulson, who made more than $1 billion betting against the housing industry just before it collapsed, but is now talking up housing in a big way. Listen to what he said yesterday about individual investment in housing.
I still feel buying a home is the best investment any individual can make. Affordability is still at an all-time high. It still costs less to own a home after tax than it does to rent. So if anyone bought a home last year, let's say for $100, you put down $20, today that home is worth $112. So you made $12 on a $20 investment, 60% return.
So is John Paulson right on housing? Our next guest disagrees. He's Yale's economics professor, Robert Shiller, who's also the co-founder of the Case-Shiller Home Price Index. Professor Shiller, so nice to have you on the program again, and really want to get your point of view of why you disagree with John Paulson.
I don't totally disagree. I think that home prices are moving up. And they might, for someone with a flipping plan who's going to get out, it might be a pretty attractive investment. But I think most people are not in that category. Most people are thinking of buy and hold. And for the longer run, I don't think housing is a good investment unless you want the house.
So you think that in the short term, if I'm going to flip the house, it's a better deal than in the long term, if I'm going to stay there and own the house? Without wading too deeply into the numbers, explain why.
Well, professional investors like John Paulson are very aware of anomalies in markets. One of them is momentum. It's been remarked in the stock market. I'm sure he knows that very well. It's also in the housing market, and it has been much stronger in the housing market than in the stock market. So when home prices start going up, they'll probably go up. I wrote a paper about this 20 years ago. It's really true. Home prices move in the same direction. They're up 12% nationally in the last year, and so they'll probably do something like that again for a year or so.
We've been raised to believe that, our parents did this and the parents before them did this, that you buy a home and you hold on to it and you're set for retirement. And then we had this housing crisis, so I get that. But are you saying that, going forward, that rule of thumb no longer exists? I mean, what really changed here?
Well, if you want a home and you want to live there, fine. Paulson is right. There's a tax advantage to home ownership. But the question in my mind is, are you going to buy a bigger home than you need as an investment, or are you going to buy a second home? I think that it's not a good long-run prospect because historically, housing has not increased above the inflation rate. Home prices are down. Now, there's a big misperception that houses are cheap now. They're not generally cheap. They're just kind of back to an average level.
So your argument, basically, if I'm understanding you correctly, is that on an after-inflation basis, you're not going to make money owning a home.
And the dividend comes in the form of a nice place to sleep, a family room, you know, a place for your kids to do the homework.
Yeah, right.
That's it. Don't expect capital gains. Now, it is true that mortgage rates are still very low. And I think of it more as a mortgage market play that might be enticing people in for the longer term. If you really plan to stay in a house for 30 years, you know, you can get a 30-year mortgage rate that's still, you know, it's a little over 4%. That's very good by historical standards.
All right, interesting conversation. Thank you so much, Professor Schiller, Robert Schiller of Yale University.
Well, television history was made today at the Emmy nominations. The political thriller House of Cards, produced by Netflix, was nominated for Best Drama Series. The first time a program that's only available through an online streaming service was recognized by the television industry's leading awards organization. House of Cards received 9 nominations in all. Also getting nominated, another popular Netflix show, the situation comedy Arrested Development, which got 3 nods, including for series co-star Jason Bateman as Best Actor. And before we go, which stocks would you like our Market Monitor guest to discuss tomorrow? You can let us know by logging on to our website, nbr.com, and don't forget to include where you are from.
And next week, we also begin a 5-part series on how to not outlive your money. So please join us for that. And I guess you can't count on your home
to bail you out.
To bail you out, according to Professor Schiller.
Now, you're going to be off tomorrow. Have a nice day off.
Thanks so
nice
much.
Long weekend. Survive the heat.
And I'll be back on Monday. But that's the Nightly Business Report for tonight. I'm Susie Garrow. Thanks for being with us.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening. Stay cool, everybody. We'll see you back here tomorrow.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrow with the Nightly Business Report News Brief. 2 titans of tech with disappointing earnings after the market closed today. Microsoft blames a drop in PC sales and weak sales of its Surface tablet computer for missing Wall Street estimates last quarter. And Google's results fell short on a downturn in its advertising revenue. On Wall Street, though, new record closes for the Dow and the S&P 500 following another string of positive earnings news before the bell and 24,000 fewer initial jobless claims. The Dow rose 78 points, the Nasdaq added 1 point, and the S&P was up 8.5 points. Detroit filed for Chapter 9 bankruptcy protection today. Dell has pushed a shareholder vote on the company's future to next week. And the original Netflix series House of Cards was nominated for 9 Emmy Awards. Be sure to tune in to Nightly Business Report right here on your public television station.